Good day all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up. And this wrap-up is for Monday, the 13th of December, 2021. So here we are getting ready for what? All kinds of central bank information. We get the FOMC announcement on Wednesday. They start their two-day meeting tomorrow. We also have the Bank of England, the European Central Bank, and 17 other central banks this week. So it is bank heaven time. Now let me tell you the issues you're going to face in this. As you're looking at the market, you keep hearing that the Fed's going to taper, and interest rates are going to go higher, higher, higher. If you lock all your friends in a room or take them out to dinner, and they're not people that watch charts, and you were to have a talk with them and say, guys, you know, a month ago we were told this, you think interest rates have gone higher in that period of time? I think to a person they tell you, yeah. To a person they're wrong. Interest rates have actually been dropping, not going up when you go from the 10-year and you start looking out at the other key ones. It's amazing. The curve yield is what the noise has been. You're taking the short-term, ultra short-term, 30-day, 2-year, 90-day, all those moving them a bit higher, just a bit, as the others are falling back as you got the curve yield. Now let me give you the other element you're going to have to deal with, the dot plot. We're going to get that famous dot plot again at this meeting. So at this particular meeting, now the hidden members that put out their plots come out. Do they move them forward? Do they move them backward? They don't tell you who they are. We just get to see how many are moving forward and backward and where they're at. You know the market is expecting there's going to be a substantial amount of moving forward. The question is June, is it going to be September, December? What part of 2022 are they going to center in? The dot plot it's not a contract. It doesn't mean that they are going to do that. The market is fluid. The Fed has a problem. If there's more Omicron, and if it turns out worse or another variant, they have to have enough ammo there to turn the economy back on. It's not just about, hey, that's over and done with, as some people think it is, and we're going to all be fine. Hopefully that's the case. We don't know. So I don't think the Fed is just going to be, we're going to turn it on, we're going to be done in March, and we're moving. Maybe May or June, we're going to start moving on those interest rates. I know people want to believe that, fine. I do understand that rent increases are insane. I do understand tuition costs in a number of major schools are going up again. Everything they can goose now is being goosed. So inflation is here. I'm a character that did think it would be more transitory than it was, and I still think certain elements will be very much that way. Look at shipping costs. Look at container costs. Now you got a dearth of containers that need to be sent out from Los Angeles. So they have to find new room to go put them. Before they couldn't get them off the ships. Things change. That's just but one example. Watch what happens as all that stuff gets delivered and we start having to get what they call the Super Saturday sales and so on, because merchandise is coming in now late in the Christmas season and the merchants don't want to be stuck with it. They want to get it out there as fast as they can for a small discount, not for the markdowns they used to have. Okay, enough of that. So as I kept telling you in Tesla, and I wrote about it this Sunday night, just yesterday, to my traders, I think it was yesterday that I wrote it, I said, you know how much Elon Musk, he sold last Thursday another $1 billion worth of stock, and people go, well, he's dropping, he sold 10% of his ownership. That's his goal to get to it. He will have, yeah. The problem is he's exercising options at the same time and getting back stocks. You have to understand the game that it's doing. There's a magnet in prices here that might, I'm not saying it will, but it's often, charts like to fill gaps. That's all I can tell you. And the market acts like that is what this wants to do. The trend is still down with lower highs, lower lows, ever since he put out those tweets and he asked people what he should do, and they answered him, and he has very much lived up to what that was going to be. This was a very, very well broadcast selling plan, but I don't think people understand his option ownership. You can see how the market's down here. I can make an argument that if you wanted to really drop, maybe the 100-day average is going to be a support zone, but more likely you're already in the support. The Bollinger Band is holding the market right now. And I realize there's that 950 area. Today you got to 951.45. I feel pretty good that I've been calling that for you. So I think the pros from this point on, it's a rougher game, way rougher. This is where I think the easy, quote unquote, easy, being short and covering stretch was too. You're oversold, you're into the Bollinger Band, you could drop more, you can see where the other averages are, and you have that 950 area where you start a gap. In Apple, I teach one thing, you don't buy over Bollinger Bands and you don't sell underneath them, but you have an embedded reading. So on this break, unless that red line closes under 79, I think the pros are going to buy before that close of 79. If it closes under 79, I think they'll bail, but this is the break, whatever it does, that I think they're looking for in the market. I wanted to go back to movie theaters because in my glory days of deciding I could spring out in my youth into so many things, one of the things I did was, by the way, I owned a baseball card company, movie theater definitely was in that. I don't believe in movie theaters, not as they are. They need to reinvent themselves. And we'll see if this can go. You remember when it went up dramatically in the summer, and I'm laughing, I'm going, how could they not be selling stock and getting all that money? I think it was a good call. I mean, there's a difference between me having been a quiet investor and an active investor. I was an active investor. And I learned that you can't be in that business. It's too difficult. You need the shopping centers to actually, in some form, pay you to be the anchor to bring in the people, because you can't make it on the business models when I was in it, and I'm not convinced it's changed in any manner. It's too easy to stay at home. And that's what I think they're facing. And certainly the Omicron didn't help. As soon as you hear that, do you really want to sit next to the guy next to you? I don't think so. When you look at ARK, still problems for Kathy Woods and her fund. So far, these bounces are just bear market bounces, no change in the overall picture so far. In XLK, the industrial sector backing off. The game starts right here at the 18-day average of closes. The market went to it. Now the close today, 104.26, it's under it. So the bears took control going home until the market clears. The 105.52 area, I'm looking for the market to try to work even lower. You're in an overbought area. A little bit of a roll puts the downside bias in there. So these numbers come, as I call them, into play. But you always have to have an escape route. Get over that 105.52. I'm out of here. Semiconductors. This is where you just churn for a bit. The money was made. This was the money made. This is the churning as the market's now deciding what's the next play in them. I think long term, it's very bullish for all the reasons I've espoused, being a 2-year book of orders, pricing power. There are new factories coming on, and like everything else, they're catching up. They're making things catch up. That doesn't mean that they're not going to keep prices high. So I think you're waiting, and obviously the supply chain issue just isn't a semiconductor, it's other parts too. They have to get everything from auto manufacturing to all kinds of electronics back on stream, but I'm not long-term bearish. The long-term charts are not there for the bear side. Cannabis, I'm still very much in the bear camp. It's a market that stinks. Pun on words, it stinks, and it's still coming to the downside. Home builders, okay, they today look toppy all of a sudden. Market, you can see momentum, got overbought, wants to turn down, pulling back here. I could see an argument to get back to the 18-day average. I think the professionals came out right here against that upper Bollinger Band if they got long. I don't know how you get long on a vertical move where every day you have a higher high. It doesn't give you a break to buy into. When I see those moves, I tell traders in my daily updates, avoid them. Put your money on the side, wait for setups you like in other markets. You don't get married to the chart. You get married to charts, plural, looking for patterns. Energy, lower low, higher high. For my written research people, and that's primarily the futures people that buy my written research that goes along with all my videos and all, I talk about today Prince Solomon, as he's coming out of Saudi Arabia, warning short sellers, don't you even think of going short oil. If you do, the wrath of OPEC is going to be on you, which means what? It means they'll cut production. And that's how they'll control it and stick it to people. So let me think. We in the U.S. and the rest of the Western world, we want to cut back and go green. We're paying the Saudis to do this, and their statement is they just want one direction in the market, and that's called up. Within reason, so they don't break us, but they first have to be able to get all our money. You may not agree with my take, and I am certainly, and I want to go on record, I am not anti-Saudi in any way, shape, or form. They have been always, I think, pretty good friends over the years to the United States. However, this was a pretty crazy statement. I don't care how rich he is, it was a pretty crazy statement. Okay, I guess it's a warning shot across the markets. In the emerging market, remember we got up here and I said, watch out, that was about all the market was worth. And that was it. You had one short covering spree, boom, you may end up at new lows before this is done. Do you really want to own an emerging market stocks going into the FOMC and 20 other central bank meetings this week? You might. A character like me doesn't. In the gold, we've talked about that the market's got big resistance from the green line and the gray. That's the 100 in the green, the gray's 200, and then the 18-week average of closes. Momentum has turned up, and you had an embedded reading that you lost, which means you often, when that occurs, and you get a reading over 21, watch, it's going to come, you make a run for those numbers, the closest main moving averages. I think you've done that job. Now the question is what next, and I don't have the answer for you. In the GDX, it's still oversold in a downtrend and just got a bearish crossover. This is not good. Do you see how the 18-week average is getting underneath the green line, the 100? So now what you have is you got a classic bearish pattern of moving averages. You have the short-term average, the 18, under the intermediate, the 100, and the 100 underneath the 200. There's nothing bullish about that. In COPEX, battleground, 100-day average up to the upper Bollinger Band. Back and forth action. Trend down, bias up, very difficult. TLT, you decide what you're going to do going into the FOMC. I wouldn't be there one way or the other. I tell traders, go to the sideline. Did it this morning for everybody that was listening. And that's my paid subscribers. Don't mind telling you that. And you're just battling in the euro, waiting on all these central banks. So there's a place to be and a place not to be. Stock indices, temporarily not the place to be. Currencies, interest rates, metals. They're all going to be impacted by the central banks this week. Let's get whatever dust there is out of has to be said and then approach the market again. And we have to be cautious. Trading's going to get thin next week as we move into the Christmas holiday. This is the last full week of trading before Christmas. If you're watching TV, already a lot of the announcers are saying, bye-bye, I'm setting my Christmas holiday, going away. I have friends galore that are going away. I will be here with you, by the way. But during that time, I want to be your go-to guy. If you like these videos, you're going to love my morning video. I go through 40 charts, specific buy and sell, and you know I'm not bashful. I will tell you, buy, sell, do nothing. This is a time to do that. This is a time to get aggressive. That's what I do. This rotates all the time, but it gives you an idea of what I'm doing. I'm always adding something, like AMC. You don't see it in there. I just put it back. I took out POTX and I put THCX in there. So I'll rotate them. We now put KBE in, a bank index I just put in. How do you do this? $8.95 for the first 30 days. Take a look. That's our phone number. And you go to our website under research. One final thing. If you're on my mailing list, because you've already gone in and you've taken a free offer, look for an invite you just got from me. I'm holding a live webinar Thursday. I was going to do it Wednesday, but I don't want to hold a webinar at 12:30 as the Fed's going to speak. The statement comes out at 1 o'clock. Why am I doing it then? Why not do it Thursday when we get to see what the Fed has done, and I'll analyze it with you and take it through the charts at that point. So please look for that. Tomorrow I'll put up where you can just go with your cursor and put it up here. In fact, I'll do it now. Shh, don't tell anybody. But if you take your cursor and you push it to the top, an icon will pop there, and on that icon, simply fill out the form and you'll get your invite, your password, and if you have anything you want me to cover, write me. My email address is in your confirmation. I'm Ira. Have a great night.